Hello everyone, my name is Karthik. I'm a chartered accountant by profession. I'm here to simplify income tax for you. Thank you so much for tuning into my YouTube channel. Let us all come together and understand the concepts of income tax in a very simple and understandable manner so that we'll be having an overall idea about how to deal with our income taxes and our personal finance. So today in our first video, we'll be dealing with the concept of income tax for senior citizens. So let us see what are the various aspects that we'll be learning in today's video. So in this video, we'll be learning who is a senior citizen, what are the income tax rates that are prescribed for the current assessment year, what is the tax treatment of the pension received by the taxpayer, what are the various deductions or benefits that are available for the person who is a senior citizen, what is the provision with respect to advance tax for a senior citizen, and what is section 194P which is introduced in the Finance Act 2021. We'll be learning all of this in detail. So let us start. First of all, who is a senior citizen? For all simplicity's sake, I will be referring to senior citizen as double S. So who is a senior citizen? As per the provision of the Income Tax Act, senior citizen is a person who has attained the age of 60 years at any time during the financial year. Let's say this financial year is 2020-21, for which assessment year is 2021-22. This is the current assessment year for which we need to file our income tax returns in the coming month. So for this financial year 2021, during the financial year, that is from 1st April 2020 to 31st March 2021, those individuals who complete 60 years of age during this period will be called a senior citizen for the financial year 2021 and for the respective assessment year, which is 21-22. Who is a super senior citizen? Super senior citizen is a person who has attained the age of 80 years at any time during the financial year. So if you have completed your 80 years of age during this period, you will be called a super senior citizen. In this connection, there is a very interesting concept. What if your birthday falls on 1st of April 2021? Let's say you were born on 1st April 1961. You will complete your 60 years on 1st April 2021. There can be two schools of thought in this. First is you will complete 60 years of age on 1st April 2021. So you will be a senior citizen for the financial year 21-22, which is corresponding to assessment year 22-23. The other line of thought is your birthday falls on 1st April, but you will be completing 60 years of age on 31st March 2021 itself. So you will be called a senior citizen for the financial year 2021, which falls in the corresponding assessment year 21-22. Here there is a circular given by CBDT, which is circular number 28/2016, which clarifies that if your birthday falls on 1st of April, then following the case law by Honorable Supreme Court in the case of Prabhu Dayal Sesma versus the state of Rajasthan, they declare that on 1st of April 2021, you will celebrate your 60th year's birthday. Therefore, at the stroke of midnight between 31st March and 1st April, you will complete 60 years of age. From 1st April 2021, your 61st year commences. So therefore, as on 31st March 2021 itself, you will complete 60 years of age. So since you have completed the age of 60 years during the financial year, you will be called a senior citizen for financial year 2021 itself and not for the subsequent year. This is one circular which I had to mention. So we'll go to the next one. What are the different income tax rates prescribed for senior citizens? As you all are aware, the slab rates that are available for a normal individual is up to 2,50,000 you don't have to pay tax. From 2,50,000 to 5 lakh rupees it is 5%. 5 lakhs to 10 lakh rupees it is 20%. Above 10 lakh rupees it is 30%. So here what we can discuss is slab rates. We can bifurcate it into two buckets. One is under the normal provisions, under the normal regime which is existing from a long time, and under the new tax regime which is prescribed under section 115 BAC. Under the normal regime, what are the slab rates that are prescribed? So if you are a senior citizen and a resident is a person who has stayed in India for more than 182 days during the financial year. If you are a senior citizen and if you are a resident in India, this is the slab rates prescribed. This is the total income. That means after calculating all your incomes and adding up all your incomes, you calculate certain deductions that are available. After deducting the deductions from your gross total income, you arrive at the total income. On that total income, you have to calculate the tax given under slab rates. Slab rates are always given under the Finance Act, the respective Finance Act for the respective assessment year. So up to 3 lakh rupees, there is zero tax. That is 3 lakh rupees is something which we call basic exemption limit. So from 3 lakh to 5 lakh rupees, tax will be calculated at the rate of 5%. 5 lakhs to 10 lakhs, it is 20%. More than 10 lakh, it is 30%. Here there is a provision of rebate under section 87A. So under section 87A, if your total income is less than or equal to 5 lakh rupees, the 100% of the tax calculated on such income will be provided as a rebate, and your net tax payable will be nil. So if your income falls below 5 lakhs or it is exactly 5 lakhs, the 100% of the tax payable will be given a deduction in the form of rebate, and the total tax payable will be zero. So what are the slab rates available for super senior citizens? For super senior citizens, on the taxable total income up to 5 lakh rupees, there is no tax. 5 lakhs to 10 lakh rupees, the tax will be paid at the rate of 20%. More than 10 lakhs, it is 30%. Here, there is no concept of rebate because anyways, up to 5 lakh rupees of income, you don't have to pay any tax. So since there is zero tax, there is no question of rebate as well. So this is the provision with respect to slab rates given under the normal regime. So what happened in Finance Act 2020 is the Government of India introduced a new section called 115 BAC, providing for an alternate regime of taxation for individuals and HUF. Under the new regime of taxation, the tax rates have been reduced for the respective slabs under the condition that the taxpayer has to forego a lot of deductions. Almost all the deductions that are available for individuals has to be eliminated, and then the tax rate has to be calculated under section 115 BAC. So what the provision says, up to 2,50,000 there will be zero tax, 2,50,000 to 5 lakh rupees 5%, 5 lakh to 7.5 lakhs 10%, 7.5 lakhs to 10 lakhs 15%, 10 lakhs to 12.5 lakhs 20%, 12 lakh 50,000 to 15 lakh 25%, above 15 lakhs it is 30%. Interestingly, there is no bifurcation for senior citizen, super senior citizen, or normal taxpayer. The slab rates given under 115 BAC is common for all individual taxpayers irrespective of the age. So if you avail the benefit of reduced rates of tax, you will have to forego a lot of deductions, almost all the deductions. What are the deductions that you need to forego? Let us have a look at that. So what are the benefits that you need to forego? Let us have a look at that. First of all, the standard deduction that you get of rupees 50,000 against your pension income This standard deduction cannot be availed. Second, and the most important part is the Chapter 6A deduction. Chapter 6A, you can claim various deductions under Section 80C, be it your life insurance premium or principal repayment of your housing loan, etc. Section 80D, which is your medical insurance premium, expenditure towards your medicines, expenditure towards your preventive health checkup, all those deductions that are available under Section 80D will not be available. Be it 80G, which you claim against the donation that you give for a charitable trust, or be it 80E, the interest that you pay for the education of your children. All Chapter 6A deductions will be eliminated if you opt for alternate regime of taxation. What you need to do is you will have to calculate your income and your deductions. After getting the benefit of deductions and calculating tax under the old regime, if it is more beneficial than not availing the deduction and calculating tax under the new regime, you need to opt for the old regime. If not, by taking the deductions and with the benefit of the reduced rates of tax under the different slabs, if your benefit is more accruing in the new regime of taxation, you need to opt for the new regime of taxation. So the next point of discussion is the pension income. How is the pension income taxed under the Income Tax Act? Pension income can be divided into two parts. One is the normal pension that you receive, and one is the family pension that the spouse of the deceased person will receive. So, where is the normal pension tax? It is taxed under the head salary, and against which there is a standard deduction under section 16(1)(a) of rupees 50,000. So from your pension income, you can take a deduction of 50,000 and the balance will be added to your taxable income. Family pension is taxed under the head income from other sources. There are 5 heads of income, that is salary, house property, business income, capital gain, and income from other sources. Income from other sources is the head of income where if the income is not getting taxed or not chargeable to tax under any of the above heads of income, it will be taxable under the head income from other sources. So under the head of income from other sources, you will be getting a deduction of the lower of the two, that is 1/3 of the family pension that is received, or 15,000, whichever is less. Let us take an example to understand. If the family pension received is, let us say, 60,000, 1/3 of 60,000 is 20,000, or 15,000, whichever is less is 15,000. So from 60,000 you will get a deduction of 15,000 and the balance 45,000 will be added to the taxable income under the head income from other sources. You will have to pay tax on this 45,000 and not on the entire family pension that you receive. So this was the taxation of pension income. Let us go to what are the various benefits that are available under the deduction schedule. As you all are aware, there are various deductions that are available for a taxpayer under payment basis under Chapter 6A. So, what are the different deductions that are available? These are the main deductions that normally taxpayers avail. There are a lot of other deductions. I'll be focusing mainly on these deductions. Section 80C, you all are aware. This is the deduction available for payment towards your life insurance premium, principal repayment of housing loan, etc. There is no distinction between senior citizen and a non-senior citizen. All taxpayers get deduction up to rupees 1,50,000 under section 80C. So there is no distinction or a separate or an additional benefit that is given for a senior citizen. Coming to section 80D. Here, there is a special benefit that is given for senior citizens. Normally, when you pay for your medical insurance or incur expenditure towards your preventive health checkup, you will be getting a deduction up to rupees 25,000. But for senior citizens, you can take deduction up to rupees 50,000. Not only the person who is a senior citizen, let's say you are a senior citizen and you're paying for your health insurance, you get a deduction up to rupees 50,000. Or let us say your son or daughter is paying for your health insurance, and since they are not senior citizens, for their health insurance plans, they will get deduction only up to 25,000. But if they pay for keeping the insurance or ensuring the health of you who is a senior citizen, they can also get a deduction up to rupees 50,000. So this is a very interesting provision. So let us come to section 80DDB. Section 80DDB is a section where you get a deduction in respect of medical treatment. This is section 80DDB. The conditions are very easy here. The assessee has to be a resident in India, and the assessee should have incurred expenditure towards medical treatment for such disease as may be specified. So if you incur in expenses with respect to any medical treatment for such diseases which is prescribed under the income tax rules, you can avail deduction under section 80DDB. What are those diseases where you can claim deduction? It is briefly related to neurology, oncology, urology, hematology, immunology, or any other specialization as may be prescribed in the income tax rules. So, if you are suffering from any of these diseases and if you incur expenditure towards medical treatment of such diseases, you can avail deduction up to rupees 40,000. So, let's say if you spend rupees 30,000, you get deduction of 30,000. If you spend rupees 50,000, you will get deduction only of rupees 40,000. However, if you are a senior citizen, the maximum deduction that you can avail is 1 lakh rupees. So if you incur expenditure up to rupees 70,000, you get deduction of 70,000. If you incur expenditure of let's say 1 lakh 20,000, you get deduction of rupees 1 lakh. So there is an additional 60,000 which is given as a benefit for the senior citizen. So this is a very interesting provision. You can definitely make use of this deduction if you are suffering, or not only yourself, even if your dependent is suffering from such diseases, and if you are taking care of the medical treatment, etc. of that person, you can still avail the deduction under section 80DDB. Last and the most important deduction is section 80TTB. Many of us have heard about section 80 TTA, which gives a deduction up to rupees 10,000 against interest earned in a savings bank deposit. But however, for senior citizens, the deduction is available for both savings bank deposit or any term deposit. And the amount of deduction is rupees 50,000 instead of 10,000 for non-senior citizens. So what are the incomes against which the deduction is available? It is against the income by way of interest earned from SB account, FD account, or RD account, or post office deposits, etc. And what is the quantum of deduction for senior citizens? It is 50,000 rupees. So this is the beneficial provision for senior citizens, which is first point, 40,000 in excess of what is available for non-senior citizens, and interest earned from any of these deposit and not just from savings bank account. So these are the various benefits that are available over and above what is generally available for a non-super senior citizen. or a non-senior citizen. So let us come to the next part of our discussion, which is advanced tax provisions for senior citizens. So first let us understand what is advanced tax. Advanced tax is nothing but the tax that you pay in advance during the financial year. For us, financial year 2021, which is assessment year 21-22. So the tax that you pay during the financial year is called advance tax. The tax that you pay during the assessment year before filing the return is called self-assessment tax. So what are the provisions relating to advance tax? Advance tax is payable by a taxpayer whose advance tax liability exceeds rupees 10,000 rupees during the assessment year. So if your tax liability after deducting the TDS, after giving credit to TDS and TCS, and the net advance tax payable exceeds 10,000 rupees, you will have to pay such advance tax during the financial year itself in 4 installments. 15% of such tax has to be paid within 15th of June. 45% of such tax has to be paid within 15th of September. 75% of such tax has to be paid within 15th of December, and 100%, that is the complete amount of advance tax, has to be discharged within 15th of March in the financial year. So what is the benefit that is available for a senior citizen? For a senior citizen, the entire provision of advance tax itself is not applicable, provided the senior citizen does not have income from any business or profession. If the senior citizen does not have any income from from business or profession, that means he has income only from salaries, from house property, from capital gain, or income from other sources. Such senior citizen need not pay advance tax. He can calculate the total tax payable during the assessment year itself before filing the return and pay 100% of such tax as self-assessment tax, and interest for non-payment of advance tax will not be levied on such senior citizen. So the last point that I would like to discuss, and this is a very, very interesting and a very new provision, that is section 194p. What is section 194p? The section 194p was introduced in Finance Act 2021. This is a very, very good benefit that is given for a specified senior citizen. So this provision is applicable for specified senior citizen. Who is a specified senior citizen? Let us have a look at that. They have defined who is a specified senior citizen. Specified senior citizen is a person who is a resident in India, who has attained the age of 75 years and has income by nature of pension or interest earned from account maintained in such bank. That means, let us write down what are the conditions. The person has to be a resident in India. The person should have attained 75 years of age. The person should have income from pension, or he has income from bank interest. Bank interest has to be earned from the same bank in which he is receiving pension. If you are receiving your pension in SBI, you should have bank interest also from SBI. Only then you can avail the benefit of this section. But what exactly is the benefit that this person is getting? This person who is receiving such pension income and bank interest need not file his return of income. Every year in the assessment year, we calculate what is the total income, we calculate what is the tax amount, we pay the tax, file a return under section 139. But if these conditions are satisfied, such senior citizen need not file any return of income, provided that person gives the declaration to the specified bank. That declaration should be given in form 12 BBA. I'll show form 12 BBA. This is the form 12 BBA which is prescribed. You will have to just enter the details which is provided here: name, PAN, previous year will be the financial year, date of birth, name of the specified bank, name of the employer, and pension payment order number. And if you sign this form and submit this to the bank where you receive pension, such bank will calculate your pension income, bank interest, aggregate it to calculate the gross total income, give all the deductions under Chapter 6A, and ultimately calculate total income, calculate tax, and 100% of such tax will be deducted by way of TDS, and the such senior citizen need not file his return of income. So this is a very, very beneficial provision that is introduced. Many people may not know this provision, so ensure you spread this information to as many people as possible. Yes, so these were the various provisions governing income taxation for senior citizens. Hope this video was helpful for you. If you find it helpful, please share it with everyone whom you think this video will be helpful. Thank you so much for watching. Stay tuned for more videos. I'll be back with a lot of other videos to simplify income tax for everyone. Thank you so much.